Ladies and gentlemen, good day and welcome to the investor conference call of Rishi Laser Limited. We have Mr. Harshit Patel, Chairman and Managing Director, Mr. Ganesh Agarwal, Chief Financial Officer, and Ms. Vandana Patel, Company Secretary from Management Team of the company. This conference call may contain forward-looking statements about the company which are based on the beliefs, opinions, and expectations of the company as on date of this call. These statements are not the guarantees of future performance and involve risks and uncertainties that are difficult to predict. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Harshit Patel, Chairman and Managing Director. Thank you, and over to you, sir.
So, welcome to the investor Concall. Thank you for taking your time to attend this. And the annual results are before you, and there was a small presentation also which was put up a couple of days back, which I hope you all have been able to go through. I think one quarter back we had a meeting where some of you all would have also attended. And since then there has not been much change as far as business outlook is concerned. So as far as last year was concerned, we had a very benign growth in sales, just about under 5%. And this was primarily, as we mentioned earlier as well, the second half was a little bit slower. Typically, second half is slightly better than the first, but in the last year, second half was lower, and therefore we were a little bit below our targeted sales. However, profitability was better, and with little bit more operational improvement, I think the profitability should get better even going forward. Besides this, I think not too much more to report as far as business is concerned. I think customers are all stable. They are growing, and we expect much better business from them going forward, especially in the second half when some of the development work which we have done will be through, and those will be commercialized. As far as exports are concerned, which is very low as of today, only single-digit numbers. We have 3 large customers for export, one from Australia and 2 from United States. And 2 of them we have already started supplies, and commercial orders are in place. And this business should go up significantly after the third quarter onwards. Raw material scenario seems to be very benign. I think I don't expect any problems as far as steel pricing is concerned. A lot of large steel capacities are coming on stream in next 6 months. So that should be okay. And typically with stable raw material prices, it helps maintain profitability, because it's the large volatility in price, especially on the way up, which causes a little bit of a problem, as we have seen in the past. So I don't expect that also to I think that should also be quite all right. The other thing is setting up a very large new plant in Bangalore, about 30 kilometers away from our existing facility. And this will be, in fact, the largest setup of the company, larger than our current big facility at Pune. And this should get on stream towards the last quarter of this year. The other new thing is that so far we have only been in flat steel processing business. So our starting material is flat steel. It could be anything CR, HR, or stainless steel. But now we are getting into round and square steel processing, that is tubes. And our first, machines which will process this should be with us by second quarter. From third quarter onwards, that will be a new business. We see a very, very large potential in that business because India is still quite undeveloped as far as tube processing is concerned. A huge amount of tubes are being produced, but still not being processed with modern techniques the way we are able to do with flat steel. So that beginning will also be made sometime in third quarter of this year. I think this is all about last year and what we plan to do in the current year. And with this, I think we can open up for questions from the participants.
Thank you very much, sir. We will now begin the question and answer session. Anyone who wishes to ask questions may press star and one on their touchtone phone. If you wish to withdraw yourself from the question queue, you may press star and two. Participants are requested to use only handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. You may please press star and one to ask questions. The first question is from the line of Rahul Jain from Credence Wealth. Please go ahead.
Thanks for the opportunity and congratulations, Harshad Bhai, on improved profitability. And as you, in your initial remarks, you mentioned about top line growth coming on in the second half. Harshad Bhai, if you could spell some details about what exactly we are talking about when we say top line will be much better in the second half. What will drive that growth in sales for the second half? That is my question number one.
Yeah.
And within that, if we can spell about the segmental, because the construction equipment for last 3 years has been around 75-80 crores, whereas our power business has grown from 6 crores to 14 to this year to 24. It has done well on a yearly basis as well as quarterly basis. So what exactly is happening on the power segment side, and going ahead, how do you look at both these segments? And within the segment, the others category, if you could talk about what is a major part in the others and where the growth will come in the other segment.
Okay, got it. Yeah. Yeah, so thanks Rahul for attending. The top line growth in the second half we are talking about more optimistically is because mainly because of exports coming online. This has been going on work has been going on this for about 9 months to a year in some cases. And those are steadily going up initially from smaller lots and to containers, and now it will start becoming regular. So the primary growth will come from there. The other area where we hope to see good growth in the second half is from the off-road construction equipment. That are these large dumper trucks. So that used to be our biggest segment within the construction equipment sector. Our biggest customers, our biggest demand was from the off-road mining, the vehicles used in the mines. And that was not growing that fast. Last 2 quarters it has been slow. It is expected to be a little bit slow even another 2 quarters. And after that our customers are expecting a good amount of growth from that sector. So it will be from this off-road vehicle mining sector as far as domestic and export is concerned, and also exports per se to the other industries which are not from the construction sector. And segment growth, I think electricals used to be many years ago a very strong focus area, and we had expected a lot of business from there, but that had not fructified. Primarily, we are in the medium voltage distribution sector. We don't supply anything to the power generation industry. We used to do a lot of work for in the past for hydel projects and stuff like that with Alstom. But now our primary customers are from the switchgear industry, voltage, that is Schneider is the larger customer in the electricals. But more other customers were added, and that is Schneider has not seen that much growth, but they are projecting very large numbers again going forward because of, in fact, as the situation stands today, they have a lot of order backlog which they are not able to fulfill, primarily because they are struggling with some imported components to make those. So once that thing is stabilized, then we expect good, decent growth from the electricals sector as well. But I still feel that the construction equipment and electricals, the ratio that we saw in the last year, it should remain something similar because both these sectors will see growth. But I think construction equipment sector will see higher growth than electricals is my feel. So maybe the percentage of sale to electricals will go down as compared to the past this year ended March 24, and construction equipment percentage may go up slightly. Though the sales in both sector sales in numbers, rupee value will be higher, but as a percentage there will be slight change again in favor of construction equipment as compared to the electrical. As far as others are concerned, we have companies from equipment, other equipment builders like compressors, compressor manufacturers. And whenever we talk of any of these equipment, these would always be the larger segments, not the consumer or the individual user segments. These would be primarily large compressors which go in for industrial use, right up to big ones, very big ones which go into the steel plants and cement plants and stuff like that. So that's one area. There are some customers who are in water processing and pumps areas. Then there are customers who are in the windmill sector. And I'm not sure whether last year I think windmill was also included in whether in this percentage it is included in the power, and because of that the power segment has gone up. I'm not very sure about that. So I think this is as far as the distribution of sales is concerned. Okay, can we go to the next question, please? Thanks again for asking this. Yeah.
Thanks, Harshit. This is quite helpful. I'll have some more questions, but I'll come back.
Okay. Thank you, Rahul. Yeah.
Thank you. The next question is from the line of Ankit Kanodia from Smart Sync Services. Please go ahead.
Yeah. Thank you for taking my question, and congratulations on good set of numbers. And sir, I really appreciate in the recent presentation we have shared the product portfolio as well, which is very helpful. So my first question is related to the export numbers. So when I see export has actually grown a lot in this year, but on an absolute basis, I think it is still about 8 to 10 crores, right?
Right.
So just wanted to understand more color as to what kind of export order, and this order would consist of how many clients, customers. Is there only one or two customers who is forming part of the whole export, or is it diversified? And if it is diversified, how can we have such a small export order? Is this just a sample thing which they are doing with us, and maybe larger order we'll get based on the review of our current this thing? That would be very helpful, sir, if you can share.
Right. Yeah. Thanks, Ankit, for joining. So your analysis is absolutely correct. This export growth looks big because the base was very small. It's on a very tiny base, so it looks as if there has been some growth. But this is just, I would say, just tip of the iceberg. It's just an entry being made. Primarily, there are three customers on whom we are banking for exports. Currently, we have more than three, but the growth will come from these three customers. One is Emerson, which, as you know, Emerson Electric is a very big, large American group. And there the initial exports have already commercial exports have started. So that will grow significantly from here. The other one is an Australian company which is making equipments for glass processing. So these are again components for that equipment which are being exported. And this we have been working with them for again maybe something like 5-6 months. And the first commercial order has just come in this current month. And once these things get set, we expect that also to pick up. And the other one is our main customer even in domestic market, which is Caterpillar. Caterpillar, we have exported parts to 2 of their plants in the US. And now they are they've given us orders for their aftermarket components. So these are components which will be stocked by them for spares and sold in the US market because these are small in volume, so they cannot source it domestically or from China or anywhere. Of course, small in volume is as far as Caterpillar size is concerned. For us, it's not a very small business. So these are the three major. Besides this, we have customer in France and also I forget in what line of business they are, but we've exported some stuff to them last year. So exports is a very big area which is untapped actually, and we also had not been able to get into that because of our own issues and which we had. And exports, it's a little bit long-term thing, but a good part of that distance is covered. So your thinking is absolutely correct that 2 crores, 5 crores and all that in export is very small. Any one customer can take you to 15-20 crores quite easily. That's the kind of business potential that they talk of. And in fact, what is happening is that what we are seeing now in the last 6 months, more and more foreign companies are trying to look at India more seriously as far as steel fabrication exports are concerned, because the costs in Europe especially have gone absolutely ballistic. So today the cost of steel fabrications from India is less than 50% of the cost of what they are able to do in let's say Germany, or in fact even in Poland, France, all these countries. So more and more they are under a lot of cost pressures, and they have to look at India quite seriously. Now, what actually happens here is that your first few customers to get and to do the business becomes little critical, because later on the customers, once you have credibility in the market, then the other customers, you don't have to go through the whole process of their long gestation and their people coming here and auditing and all that. Once they know that okay, you are already a supplier to top grade companies, so once that credibility is established, to expand that business will become much easier, which I think will happen not in this coming year but the year after that. This year we'll consolidate business with the customers whom we've already tapped, which should pick up quite substantially. But in the coming years, if this what trends I see, exports could grow so much that it could be as big or even bigger than the domestic business. That's the kind of potential which I see in the exports business.
Thank you so much, sir. That was very helpful to share a detailed answer on this. So my second question would be related to our upcoming capacity in Bangalore. So, if I remember correctly, in the last call, you mentioned that we are only having a 50% capacity utilization currently.
Right.
And on top of that, if we are going for such a high CapEx, is it right to assume that there should be some product mix shift towards more high value added products there? Or will we be making the same kind of products in that facility as well?
Right. No, see, actually, we have various plants, as you know, in different parts of the country. And because of skewed nature of our capacity and demand, it is funnily where our largest facilities are in Pune and the second largest facilities in Gujarat. These are underutilized, whereas our facilities in Bangalore and Chennai, the business is more than what we can handle from our existing factory. So that is the reason for setting up this unit in Bangalore, because we actually in the last year we have lost some businesses because we didn't have enough space to do that business, some bulky businesses. And currently we have 3 small units just abutting our existing factory, which we have taken on rent as a temporary measure to because the business had gone up more, so we had to use that temporary facilities nearby. But that is very inconvenient because you have 2 or 3 small shops supporting our main shop in Bangalore. That is the reason why we have gone for this big facility. So we will move our major customers' business to the new facility, as well as now we are changing a little bit way of working, in the sense that we will consolidate. Today we have all our factories have entire facilities from first process to the last. That means you take steel and you can make the final product. Now we will be changing slightly the way we do business, and in the new plant there will be a very large cutting facility and cutting shop, which will supply parts to our Chennai factory and our current Bangalore factory. So with this consolidation, it will sort of increase our capacities in our existing 2 plants, because some space will be released. Plus, with this new space being with us, we expect some more business to come from a couple of new customers who are in electric vehicles, not passenger vehicles, but small vehicles made out of battery operated vehicles, load bodies and few other things. So those kind of some new businesses, but primarily more of the same from similar customers, as well as export also will be done from the new facility. So no new product as such. Of course, this tube business also we are talking of will also go into the Bangalore facility. And tubes is a very large. It's another very big animal and a very large business. It's little initial stages, and I think this is a little too early for me to give a very detailed presentation on that. But as we go along, maybe another 2 quarters from now, that we can discuss that also a little more. So as far as new product is concerned, it will be tubes and pipes. But major part of the business for the new facility will be from existing customers and export. So the excess capacity is not in the southern plants. It's there we had constraints of space. That is why the new facility is being put up.
Got it.
Yeah.
Well, and when we are looking more towards export and believe that export will increase in a much faster pace compared to our domestic sales, are we also planning some facility near the port areas like Bhuj or Kutch, where there are ports? Are we planning something like that?
No.
Are we fine?
No, we are not, because see, our business, our work is not that way, that bulky that we need to be near the port. What is important in these businesses is your technical knowledge of all this, because ours is not a process industry, as you know, it's all discrete manufacturing. So the human resource and other things are very, very important. That's why these plants we cannot put up, in faraway places, away from, that's the reason our plants are also in big cities, whether it's Bangalore or Pune or Baroda, etc. We are not, in Chhattisgarh or near a steel plant in Bhilai or something like that, or near a port. So no, we do not look at. So for us, we cannot go. I mean, it doesn't make sense to go near a port like that.
Got it, sir. And sir, I see our fixed asset turnover is very low at 2 times, but I think this is immediately because of low utilization level, right? If we reach closer to 100% utilization,
yes,
where can we go in terms of fixed asset turnover? If we take also the increased capacity of Bangalore, which will come up in the next 1 year.
Yeah, so the Bangalore facility itself will be about 70,000 square feet. So for us to get that plant also fully occupied will take about 2.5 years. It's such a large facility. The reason for going for a large facility was that this area was available, and if we do small area expansions, we are finding that we are always running short of space and continuously in a building mode. And our layouts also, we cannot plan that efficiently. So that's the reason we've gone for this. So as far as, the Pune capacity, space-wise and equipment, with some equipment being added itself, has capacity of doing more than maybe 100-150 crores in that larger facility. In the past, we have done that also. But in the downsizing and all that, we had to cut down a lot of our sales. The other thing, as I had mentioned in the previous meeting, is that we have changed our entire strategy of sales and got away from more higher volume sales. Even within the earth moving industry, there are lots of components which are high in volume and sales value, but the value addition is lower. So now we've tried to move away from that, and that is the reason top line growth, even going forward, will not be very fast unless we decide to again get into those markets. But I don't think as of today we don't have that. Since we have vacated that space, we don't feel it is better to get back into that, because that is more competitive. There is business, but it is too competitive and too much volume driven. And whenever we've looked at very high volume driven sales, the cycles and the up and down hurt us much more rather than when we are a little bit more concentrated and focused on certain areas. So the infrastructure-wise, we have a very large infrastructure already in place to do much larger sales. But despite that, the sales growth domestically will not be that high. And that is also the reason for getting into the tubes and those kind of businesses, which are also in steel, which are related in one way, because similar infrastructure companies and other areas we can supply tubes and pipes. So growth we want to do more in a balanced way with some newer types of components and assemblies, rather than have very high volume growth in high volume markets.
Got it, sir.
Yeah.
That was very helpful, sir. And sir, regarding the kind of growth which we are expecting in the coming years, how are we placed in terms of funding? How do we see our funding going forward? Is our internal approval sufficient, or are we going to increase our debt and equity funding? Any broad guideline on that? How do we want to move ahead?
Actually, last year in September we had become debt free, and then after that we have taken some small loans because of capex requirements. So going forward, also at least in the coming year, a good part of growth, whatever we've planned, will be out